North American stock market spent much of the day swinging back and forth from a little red to a little green and back again. The volatility all began during a sell-off on Friday, a sell-off that accelerated through Wall Street yesterday. And it all has industry veterans even scratching their heads about what comes next. And if they're confused, what can you do to help protect your investments when stock markets are so uncertain? Joining us for more on this is Sheryl Purdy, Vice President and Investment Advisor at Leede Jones Gable. Nice to see you. Thanks for coming on the show, Sheryl. What are you telling your clients in the midst of all this?
Well, first of all, they already knew that heading into 2018, what we were doing is maintaining good quality companies. So we were not heading into high volatility stocks or really high risk stocks. So we were not part of the sell-off. And in fact, this morning I was busy buying. So I had blue tickets all over my desk, and it was awesome. I loved it. It was great.
Is this another example of the, the safety and passive investment versus active investment, especially from, sort of schmoes like me trying to figure out how to invest through a period like this?
Well, fair enough. I think that there has been basically over the last 6 months, I would call it a very much interest in short-term players have come into the market. You can see that with some of the larger bank firms where they had their trading seized up and they weren't able to complete the trades because there was so much volume and people trying to call in to get their trades done. We didn't have that problem, and it was what we saw was people madly trying to get out or into a lot of the pot stocks, as it were, at that time. So that you see a different kind of investor, a different kind of market participant, and they have a very different time horizon and risk tolerance, and I would say almost knowledge of the market because they're new to the market. They haven't seen swings like this. I think perhaps they might perceive that if it's going up, it'll go up in a straight line, and it never happens like that.
Well, and you can't blame them. I mean, if you go back to 2008, they've seen nothing but gains. If you got in after after 2008, you've seen a really solid run of stocks. If you go back even a couple of years, we've seen enormous gains posted by the major indexes. These people that have only ever known that, this must be emotionally, sort of, intellectually hard to get your head around what's happening right now.
They're not prepared, and that's my job, is to make sure that my clients are prepared. And one of the things that's really important is to make sure, as your investments are going up, that you make sure that you always get your original investment out. So there's a term, playing with someone else's money. Once your money has been taken out, I find that clients are much more patient with gyrations within the stock price, and that's a really good strategy to do that, and that's something that I've done with my clients.
Well, and how important is it to just sort of underline for them that yes, there was whatever it was, a 1,600-point drop midday yesterday, closed down 1,100 points. But if you go back, I mean, I remember this time last year, everybody was euphoric on the fact that the Dow had broken through 20,000 points. It's still way up on that. I mean, the gains that they've seen in spite of these drops, they've still seen enormous gains on the year, on the 2-year, even more.
Oh, absolutely. And that's something that I know that the market, we've been waiting for a healthy correction. I'll paint you a picture. Yesterday I had a lovely client who came in for her appointment yesterday, and we sat down, and then I glanced out of the side of my eye, and I could see that the Dow was down by 800 points, and I tried to put my eyeballs back in my head without having her panic, and it wasn't until after we were done our meeting that for me it was important to dig into what just happened. And so digging into it, I realized that the fundamentals are still there. We are not heading into a bear market. This is a very healthy correction. Part of the thing that we could see is that global growth is still strong. You have earnings that are positive. You have you don't have companies that are laying off people. In fact, you've got really strong numbers. Yeah, not only do you have strong numbers of job growth, but as you said, with wage increases, now what's happening is that in order to attract skilled workers, they have to pay them more.
Right.
And that's been something that definitely that I've been watching for, is to see whether or not there are wage gains. So there are starting to be wage gains, and you're seeing the central banks are also increasing their core lending rates. They've done it in the States, they've done it in Canada. So this is something that was really interesting heading into yesterday's sell-off, is that what was people have said is the trigger. It's well telegraphed. It wasn't a surprise, and markets always trade sort of 6 months in advance. So it was being, I want to say, factored into the Friday sell-off.
Right.
That was already factored into it. So yesterday's sell-off was, welcome to whipsaw, and I mean, that's exactly what it was. And so I think one of the things that I was asked this morning was, how did you feel about that? And in my mind, it was calm, very calm. I mean, clearly, for me, it's unnerving not to have all the facts, and I had a client with me at the time, so I couldn't. Right. There's nothing I could do but from that point. However, digging into it afterwards, once I realized, this is insane, the way it dropped so quickly in like 10 minutes, and then whipsawed back. To me, that was program trading. When you have program trading, there are certain the computers have certain triggers, and that starts a sell-off. And that, because it was so fast. And then what happens is that, for example, one of the things that I did I have had certain stocks protecting clients' upside. So I spent, in a very calm manner, about 3 weeks ago, looking through to see what would happen, say, for example, with NAFTA. Say NAFTA completely was dissolved. What in my clients' portfolios might be at risk. So I had clients that were up $20 on a particular stock. So we put in what is called as a stop loss order. And so what meant is they didn't sell it, but it meant that if the stock dropped to a certain limit price, then that stop loss order was triggered. And if it wasn't filled at that, I had instructions with our trader to sell at market, and they got out. Well, that was triggered this morning. So it meant that those clients, even though there was a sell-off, it was triggered, they still made money, and we protected their upside. So I would definitely make sure that clients find strategies such as a stop loss.
Just to try to find their way through this time in the market.
Yeah, make sure you protect your original investment. Make sure that if you, for example, with the clients who are playing in the marijuana sector in particular, if they are up, if they've doubled their money, for Pete's sake, sell enough that you get your money out.
Absolutely. Great point. Listen, I'm going to have to cut you off there, Sheryl. I'm sorry to do that to you.
No
worries.
A good chat.
It was great. We're running out of time.
No problem.
Great to have you on. Sheryl Purdy, Vice President and Investment Advisor at Leede Jones Gable.